Hey everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. The oil prices stagnated after the Federal Reserve swung to new highs in interest rates and interest rate cut. The Fed's failure to raise interest rates and its expectations of a rate cut in 2024 is undoubtedly one of the hottest topics in the world, affected by the overseas stock market continue to strengthen. However, with the Federal Reserve's latest statement to cut interest rates, the international gold price also returned to the adjustment pattern. The situation is like this. In the early morning of December 14th, Beijing time, the last rate hike of the year was not implemented. Instead, President Jerome Powell also released the view that interest rates may be close to the peak of this tightening cycle, and the Fed may cut interest rates in 2024. Except, traders even expect the Fed to cut interest rates 3 times by 150 basis points in 2024, with the Fed as soon as March 2024. But the Fed's expectations of a rate cut soon raised concern about local economists. Business Insider reporter said the Fed has raised interest rates 11 times since March 2022 to curb inflation, and however, the inflation has not returned to its 2% annual target, with the CPI still rising at 3.1% in November from a year earlier. Some economists have warned that a Fed rate cut will trigger another wave of price rises in the U.S. As a result, only one day after the Fed announced a rate cut, on the evening of December 15th, a number of senior Fed presidents expressed their hawkish views, warning that the Fed needs to see more progress in inflation before considering a rate cut, in an attempt to calm the market speculation about an imminent rate cut. Among them, the third largest Fed leader, New York Fed President William Williams, made it clear that he did not recognize the current 5.25% to 5.5% benchmark interest rate is restrictive enough. Under the influence of the Federal Reserve's 2024 interest rate cut expectations, the international gold price also fluctuated. Beijing time on December 14th. New York gold rose 2.41% to cover $2,000 an ounce round return at $2,043. On 15th, it continued to rise to $2,062.9. However, on December 16th, it went up from 0.412% to down 1.07%, and the final decline is at 0.57% at 2,033.34. It is worth mentioning that the New York gold has been a height sideways since its peak of $2,089.2 in August 2022. On this October, the target starts to rise from 1,800 to 2,100 even, and then falling back to $1,987.9 to stabilize and recover, but then fall into a consolidation state. So, the fundamental reason for the Federal Reserve's dilemma right now is to assess the impact of future inflation change on the CPI before the impacts of adjusting or lowering the interest rates having an impact on the U.S. economy. The U.S. stock market plunged several times during the times when the Fed signaled a rate cut, and 2025 is a 7-year after 2018. Therefore, the fundamental reason why the Fed is ready to cut interest rates is the expectation that the U.S. economy has a crisis due to the debt problem, and needs to use easy liquidity to hedge the economic downward pressure. However, the price index of the U.S. in recent 5 months without raising interest rates is in the case of obvious recovery, and makes the Fed countercyclical adjustment into a dilemma. It can be seen that the U.S. economy is difficult to balance between protecting the economy and fighting inflation. which makes the Federal Reserve's monetary policy uncertain and thus affecting investors' attitude towards gold. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.